started. Hello Forex traders, you're welcome back. This is Charis Trading Institute Forex dollar analysis. Alright, this is 14th of March 2023, and today I just want to take you through my expectation on the dollar and foreign currencies pre CPI news and what we should where we should position ourselves prior to the CPI news release. All right, so if you are with me and you are hearing me, I'd like you to comment on the comment section of this live video. Let me know that you're hearing me. You can just drop a comment in the comment section. Hello. All right, so this is my dollar DXY daily time frame, and we are still going to study what price action is doing on the daily time frame. Okay, so this is the daily time frame. Previously we saw that price had swept buy side liquidity residing above this old high, or you can call it relative equal high, the highs of these two candles with the body of the candles relatively equal. This old high also had a buy side liquidity pool residing above it, so the dollar index swept the buy side liquidity residing above this high, and traded into a volume imbalance residing above the highs. All right, so and we started to see the dollar repricing into a discount. If you use your Fibonacci and place it between this low to that high, okay, that swing high, you will notice that the dollar had traded into a discount about 62%. Price is currently below 62%, and that confluences with a bullish order block on the daily time frame. All right, so we see that on the daily time frame, this is a bullish order block that the dollar is sitting on currently. The dollar is sitting on, or is rejecting, the open of the bullish order block candle. All right, so on the daily time frame, I'm looking to see the dollar trade to the upside, minimally to reprice into the imbalance that was created during this expansion to the downside. This is a sell side imbalance and a buy side inefficiency. It's a one-sided price delivery. All right, this is also a breaker block. Okay, so going forward, I'm looking to see the dollar reprice into these levels. First is the breaker block. Okay, this is the breaker block. Price from the low, from the higher high, and broke structure to the downside. So I'm looking to see the dollar trade into this breaker block, and my next target is this fair value gap. All right, and as you can see, this is the new week opening gap. I'm also looking to see the dollar at this reprice or return into this gap to either find support and start it, to either find a resistance and start to trade to the downside, or as well the dollar can as well take out the buy side liquidity residing above that high, that swing high, and trade into our already outlined weekly sell side imbalance and a buy side inefficiency. This fair value gap you are seeing, and also it's a mitigation block on the daily time frame. Okay, price formed a lower low, formed a lower high, broke structure. So this is a mitigation block. I'm looking to see the dollar reprice into these levels I outlined. That is what I'm anticipating on the dollar. The breaker block, fair value gap, all high, which is buy side liquidity residing above it. There's a bearish order block right here. There's another buy side liquidity residing above this high, and the sell side imbalance, buy side inefficiency of the weekly time frame. Okay, when you incorporate weekly market profile, you will notice that price opened on Monday and started to trade to the downside. Price opened on Monday and started to trade to the downside. Okay, this is the Sunday candle, this is the Monday, all right, and this is Tuesday. So I remember that if price is bullish, we would like to see price moves to the downside between Monday, Tuesday, and Wednesday to form the low of the week before we start to see the true buy side distribution. Okay, and we have seen the dollar trading to the downside between Monday and today, Tuesday. Hopefully we see the dollar form the low of the week on this bullish order block of the daily time frame. When you go to the 4-hour time frame, you'll see that this also confluences with a mitigation block of the 4-hour time frame. Price formed a low, took out sell side liquidity residing below this low, then price expanded to the upside, price traded down to form a higher low, and price formed a higher high. So this is mitigation block. Remember, we said the mitigation block is when we see price form the low and then a failure swing and price break structure. And this is what we see here. Price formed a low, okay, price formed a high, formed a failure swing, and price broke structure. So this is a mitigation block. All right, so that mitigation block is already outlined. That is where the dollar is currently sitting on, that mitigation block on the 4-hour and a bullish order block on the daily time frame. Okay, so I would like to see the dollar gives us signature to buy into those levels outlined. As you can see, there's a drawn liquidity here on the 4-hour too. Okay, price should trade at least into the buy side liquidity residing above the relative equal high here and trade into that imbalance on the 1-hour. Okay, so intraday on the H1 time frame, we can see that the dollar gave us a displacement to the upside. There's a break in market structure. Okay, price gave us a shift in market structure. Price formed a low, formed a lower high, formed the higher low, shift in market structure. Price traded into the fair value gap here. The dollar may still want to reprice deeply into that gap, okay, before we start to see the distribution comes during CPI. All right, the reason why we are seeing accumulation from the London Open is because of CPI. It's called time distortion. Institutions are repricing and accumulating contracts and waiting for time and price to come together before they start to distribute. Okay, so this is that fair value gap. This is the gap opening. So the dollar may reprice into that gap opening, take out the sell side liquidity residing below this low, trade into that fair value gap with a bullish order block before the dollar may start to trade to the upside. So once it trades into these regions and I see confirmatory entries, I would like to go long on the dollar as I short foreign currencies, okay, GBP USD and their like. So let's do an analysis on GBP USD and see if we have something that is interesting on the GBP USD. So this is the GBP USD 1-hour chart as well. Okay, so remember, let's just go to the daily and have a direction. So on the daily time frame, of course, the GBP USD created an expansion to the upside, took out liquidity residing above these relative equal highs, okay, and traded into the rejection block here, and as well the imbalance that we see here. So I will still like to see the pound dollar reprice into at least this volume imbalance, because that will be the drawn liquidity, the volume imbalance here. volume imbalance, and the bullish order block right here. I'd like to see it trade into at least this volume imbalance, this breaker block, or 50% of this bullish order block. This is my expectation on GBP USD daily time frame. Okay, before it starts to take out buy side liquidity. So on the 1 hour time frame, we have seen that the pound dollar also created an expansion to the downside. This looks like smart money reversal. Okay, and it created an imbalance that price has been reacting off from this imbalance on the 15-minute time frame. You have more clarity. You see that price broke structure here. Okay, created that imbalance, traded into that imbalance, and price started to go down. Okay, this is also another shifting market structure. Price broke structure, created an imbalance. Okay, so this is where I'm looking to take shots. If you just see a 5-minute confirmatory entry, you can take shots on GBP USD. All right, guys, don't forget, we can be wrong on this analysis, and this is why you must use a proper risk management